Hello, everyone, and welcome to the CEO and Market Expert Interviews. I'm your host, Lucian. Some of you know me as Triangle Investor from X or former Twitter. Today, I'm joined by Marc Henderson, Laramide Resources CEO. Marc, great to have you on my show again. Welcome.
Yeah, thanks, Lucian. Nice to be with you today.
Yeah, a lot of things has changed since you and I spoke last time. On the uranium market. We are seeing a real robust uranium market now. Marc, what do you think? Are the things about to stay the same? Are they going to change? What's your take on the current uranium market?
Well, I think we've sort of entered a new higher plateau of prices, in my view. Everyone always thought we'd get past that, or at least to that $65 kind of incentivized price, if you will, that people talked about that would be required to bring some new supply on. Yeah. We kind of blew by there in a hurry, which I think took a lot of people by surprise. Really, starting from the WNA back in September, right? I think that was a bit of the catalyst for the market to really take off. It was performing then, and then the last quarter of last year really sort of went into overdrive. But based on the short-term supply issues that we have and the supply curtailment announcements that we've seen from really the two biggest oligopoly players in the business, you got to think that the supply shortfall is going to take a while to work itself out. So, my view is kind of we're into a new higher level, whatever you want to call it, plateau, where that range is it 80 to 120? It's in some broader range, and really the term price matters. But yeah, no, I don't think we're going to have a spike. I don't think you're going to have, this is not a ski slope coming down the other side of this thing anytime soon. And I think people that are newbies to the commodity in the space kind of need to recognize what differentiates uranium from some of these other commodities, that are either super GDP correlated, in the case of Dr. Copper or something like that, which people talk about, or lithium, which when you look at it, really the demand profile and that everybody got excited about was all just based on models, and the models ain't working out.
Yeah, definitely. And what do you think about uranium equities specifically? Are they going to follow the superb uranium fundamentals and the general market, or what do you think? What is next for the uranium equities?
For the equities?
Yeah.
The equities, they're, it's, first of all, it's a pretty small club, as you know.
Yeah, definitely.
Very small club. Most of the folks that are in these bigger ETFs is probably your basket of names plus some outliers that might make a discovery. They've all performed very, very well. So I guess it's all a question of where you see value and where you see sustainable demand, because you got a basket of names that are really all most of them are in the developer space, the ones that you probably focus on.
Yeah.
The biggest one's Cameco. Obviously Cameco's performed very well. It's unusual where you get a situation where, a big important player in the space underperforms or misses expectations and their price goes up. So, the whole group is kind of really in a sweet spot at the moment. And I don't see that changing much. I think there's room for growth, obviously. The demand profile is rock solid right now. Yeah. You take the price up high enough, who knows? You take the price to $200. Does it start changing people's plans about how they're going to make electricity in the future, what the mix is going to be, vis-a-vis nat gas or renewables and so forth? But so far, at 100, the utilities are complaining, but let's get serious. It's not a crisis for the price of making a kilowatt hour of electricity.
Yeah, good point. Marc, you had a quite dynamic few months for the company, and I would like to cover all your projects with news and updates, starting with Crownpoint-Churchrock Uranium Project with January release of PEA. We know the numbers are good, but Marc, please tell us how good are they?
Well, I think we put forward a project that, we'd sort of been communicating to the market a little bit about, but you're a little bit hamstrung by the rules, by the 43101 disclosure rules, by various Australian rules, in terms of what you can say, firstly without resources, and then obviously around economics and what have you. But I think most people in the industry knew the project, and I think the project we put forward, albeit we put forward a production profile that's very stretched out. Like in reality, we have a very big resource relative to some of the other ISRs, 50 million pounds, 30 plus million recovered.
Yeah.
And, we will probably in reality won't take 30 years to mine it out. I mean, that'll get scaled up on some basis, but generally speaking, what you see there is for a project like that has the grade profile it does and the location it does and everything else. I mean, I think that things like the CapEx number kind of falls in line where people thought it would be. The production rate, I mean, every one of these US ISRs tends to start around 1 million pounds a year. That's just the nature of it, they're very, they're economical there. And obviously if you can bump the profile to 1.2 or 1.5 million pounds per annum, the numbers start looking a lot better in terms of returns. And so I think we have a thing that looks like a lot like the other things, only our resource is bigger at the end of the day. So I think it's going to take a little while for that to percolate through the analyst community and that sort of thing. But I think over time, I think that project's going to get, valued appropriately. And probably, I think we've had a reasonable response to it. And it's kind of in the mix now, I think, in terms of where it sits as a project, where it sits in terms of when it's likely to come online, in the later 2020s kind of thing in terms of, and that's where you sort of got to put all of these development players. I think the projects that are going to be required to remediate the supply issue, we know about most of them now. It's really only a question of how they fit into the space, right? How big and when, and a few of them have little impediments here and there, mostly permitting things, or things like the ones in more challenging jurisdictions. I mean, the reality is the projects are still probably going to produce, so it doesn't change the supply profile per se.
No, definitely. Marc, but let's clarify press release that was out on February 12th. I mean, retraction of production targets and forecast financial information. What was that all about, so investors could get a full information?
Sure. Yeah. No, happy to explain that. So there's sort of two dominant reporting regimes, if you will, in public markets, in resources, certainly mineral resources. You have this 43101 silo of reporting, and then you have this JORC compliant reporting, which is Australian based, which has a lot of additional disclosure to it, and certain things that are quite different when it comes to economic studies. They call them scoping studies. We call them PEAs. They don't really want you to use inferred resources at all over there. And if you do, you sort of got to use it in a very limited way. And you're basically, I think you're sort of allowed to use them to recover your capital costs. And at that point, anything beyond that is really not usable. Whereas in the North America, you can do what we call a PEA entirely off inferred.
Yeah.
And so because of the nature of the way we acquired our resources with Churchrock, where we bought them, and we've only done, there's almost a couple thousand holes. We've done only 7 of those confirmatory, but the quality of the work and everything else, there's no question all the resources there. It's just the reporting and standards kind of thing. And so we've got an economic study based on that. And over time, if we decide to do a more elevated economic study, it'll probably be at the same time that we have a higher qualification of resources. And so that was really a quirky thing. So the reality is you can't really use inferred at all in Australia. And so we had to kind of finesse our way to resolving that in a way that allowed, obviously we spent some time and energy to make the stock trade over there. We've been listed there a while. We're wanting to get more active there now because obviously the investors are interested in it. And so it was a bit of a hiccup, but I think it's in our past now. And that's really the sort of the long and the short of it.
Marc, has anything changed with the timeline to production? I mean, when are you targeting, in ideal circumstances, when are you targeting first production?
So on the American, specifically the ISR project, we require a permit, and that requires a study. And so the study is sort of within our control within a reasonable period of time. But when we actually get handed the state permit for the aquifer exemption, completely out of our control. So obviously we're a bit reluctant to put a definitive timeline on that then subsequently has to get revised, which is never viewed favorably by investors and so forth. So we just don't really, at this point in time, want to put a particular year to the when we might be, and really it's when are we going to be shovel ready? Because the beauty of a ISR, and you probably see it in the numbers we put out in, and there's similar studies, you know, the enCore project in South Dakota, Dewey Burdock, you know, similar things, similar kind of numbers. And when they get shovel ready, probably inside of a year, the thing will be built, because that's the nature of how these ISRs go, right? So in contrast to like a big, deep underground thing, or even what we'll do in Westmoreland, where you've obviously got, you know, you got to build a process plant in a remote location, other things. The lead time once you get to from shovel ready to construction is a lot longer. And also in the case of Churchrock, you know, the CapEx number is a very manageable number for even a development company. I mean, our market cap's now, you know, a couple $100 million plus with a CapEx of say 50. It's, you know, a very doable thing. You can see how that gets into production quite quickly, really, without encumbering a lot of your production with contracts if you decide not to. Okay. So, but it's, you know, is it 10 years away? No. Is it somewhere between probably 2 and 5, probably in there? And I guess the big question is, you know, suddenly there's a new boss in town in Washington, D.C. Does that change anything in your permitting dynamic in America with how the responsibilities get divided? Nah, hard to say. I would say the only thing I would say about that is the American utilities will now very much support their own domestic production sources. The American military very much is suddenly, you know, a little bit concerned about where they're going to get material from, because they sold down a lot of inventory and that sort of thing. And they have a lot of stroke in the government at various levels. And so I think the thrust to basically become more pro nuclear domestic production in the United States, I can't see that reversing. And so that's helpful. It's helpful to have a tailwind from that standpoint. I mean, you've been covering the space for a while. If you followed all these things where, you know, we're part of a association that, you know, we try and influence Washington a little bit or whatever with policy. And it started with that whole 232 thing where, you know, American uranium for Americans and all this kind of thing. And I think that started in 2018. And really what fixed it all was the price, but it doesn't hurt to try. And we're, you know, they're there and they know we're there. And so people are aware of the issues, but you know, at the end of the day, the realities of the marketplace kind of are probably what drives the most dramatic change in the shortest period of time. And I think we're kind of in that window now, really, especially the other thing that's happened, and I'm sure you talked about it with lots of your guests, is we really do have this kind of bifurcated market, whether you want to draw the line east, west, or whatever you want to draw the line, wherever you want to draw the line. But, you know, you've got two big superpowers that are adjoined to the largest uranium producing nation in the world. And it's, you know, always been quite conceivable that why would they bother shipping any of that to West? Maybe they're just lazy. They could sell it all to those two countries. And the political realities now suggest that though that's also aligned with them just, hey, maybe we're just a lazy producer and we'll just sell it all to those two countries. Plus, no one really knows, you know, what is their capacity to produce at a sustainable level for a period of time meaningful to the utilities, you know, and that's not a year or two, that's a decade or more.
No, definitely.
Because they're the big gorilla, let's face it. If they were 60 million pounds, right? So
yeah. Oh, okay, Marc. So let me get this straight. Production, like you said, between, let's say, 2 or 4 years from now, I get it. But what will you do in the meantime? What do you have to do to bring this project to production ready status? What are your next steps?
We've said this really, particularly about our two biggest projects, the Churchrock and Westmoreland, which I'm sure we'll talk about.
Sure.
We've always said, and that's why people go, well, everybody doesn't seem to be moving that quickly. Well, part of the reason is because, you know, we were around in the last cycle. These projects, we always thought they were, you know, very high quality, low technical risk projects. And in reality, both of them don't really need to get any bigger, and they never needed to get any better. I mean, getting to the incentive price was certainly very useful for us, because if you're on the lower part of the cost curve, then you're automatically going to be good to go when you get to the incentive price. The incentives price is meant for the, you know, the fourth quartile producers. And the things we have were never that. So notwithstanding that, we've got big potential in Australia to make it bigger. and better and maybe higher quality. So obviously we're gonna try and do that. But we don't really have to do much other than just get the permitting. And permitting is more time than money. That's the frustration with permitting is you can't accelerate it with dollars. What we do have is we have a couple of one thing high price has done for us is we had a couple of hard rock projects that people had probably forgotten about. We weren't paying a lot of attention to it. Those now suddenly look interesting as nearer term producers, particularly this La Sal thing, which is 50 miles from the blanding mill. And in a scenario where that starts to get operational and has production visibility out, let's say 3 to 5 years of visibility, they need a lot of sources of material to keep the mill full. I think it's a 2,000 ton a day mill. So we could be, and that one's permitted effectively to get started. So that could be a thing that will surprise people and say, hey, okay, in 6 months, we're going to ship some tons and we're going to be in the business because, we've already got what we need to do to get started there. The other one in Australia requires political change, which we think very likely could come this fall. And then that one from a permitting standpoint relative to, I would say, U.S. projects, certainly, and even Canadian projects, because they're much more complicated with underground, typically the Saskatchewan ones now, they're underground projects with multiple shafts used in mills. And they're just the permitting elements of that are much more complicated than what we're proposing to do on ours. So again, from the time of being shovel ready to construction, that could surprise people as well. I mean, that could be a thing that if the government flipped this fall, 3.5 years later, that could be up and running.
Yeah. What about La Jara Mesa uranium project? You signed an agreement with United States Forest Service towards reinitiation of the EIS for the project. Tell me, what does that mean?
So that project came with the same package that we bought La Sal, and that's, we bought it from Homestake, which was by that point a division of Barrick. So, but they were a big legacy producer in the 70s and 80s. And they're nice projects. They were kind of the last projects that they found that they never put into production. And back in those days, the New Mexico stuff, the hard rock stuff like La Jara, there were 7 hard rock mills in New Mexico. And basically a lot of people just shared mills, did arrangements where they kept the mills full with production from different ore bodies. And so that's one of those that probably would benefit the most from that. But at the price we're at now, should this price be sustainable, like your $100 type of range, or we are in the top end of my $80 to $120 kind of range, and you could get some U.S. utility contracts because they'll get security of supply. That's a thing that conceivably now can withstand the trucking cost over to blanding as well. Because, there's only that mill, and I think there's Shooter Canyon, which is further away in Utah. So it's really the lack of milling capacity that is holding back the hard rock, any kind of hard rock revival in the United States, because someone's got to sort of take the initiative to build something new. Or, but first let's get blanding. Let's see blanding get full. I mean, EFRs, I know they've made disclosure that they're planning to, do that starting next year, early next year. So, we're optimistic about that. And that certainly is a project that could also be interesting from that standpoint as well. Failing that, we're going to go ahead, get the permits, and be ready.
Okay, fair enough. Let's move to Westmoreland uranium project. You have completed diamond drilling, 40 holes, 4,000 meters. What's your comment on results?
Well, we've only released about, I want to say 2/3 of the results. I think there's a dozen or more so holes still to come. Mm-hmm. Those remaining holes are coming on the target that was the closest to, it's infill drilling, in some cases extension drilling on one of the 3 zones that make up the resource. So I think, by and large, I think we're pretty pleased with what we see there, which we went in there with the objective of, what can we do to sort of see what the overall exploration picture looks like on the project, and also what the immediate expansion potential is of the project, which, as I said earlier, at 50+ million pounds and a 10+ year mine life at scale, it's already interesting from the standpoint, because that's the kind of project that you want for the utilities, where multiple utilities can get a little piece of it in terms of what's in their supply profile, which is attractive to them. And it's in the tier 1 jurisdiction. And so I think we were happy with that because, we knew about some of these deposits, some of these other satellite deposits that we think are interesting, certainly look interesting, need a lot more work. We see the potential pretty easily with now a bigger program this year, which we'll be doing. We'll be announcing that in due course, and we'll have multiple rigs this year instead of one. We had one rig last year. So we're quietly sort of beefing it up with the view that, ideally at the end of all that, we'll be able to put maybe a revised resource out. And our target is really to add sort of 15, 20 million pounds to the existing resource. Because again, if you make the project either bigger, maybe you make it a little bit better, you find a little better starter deposit, or you find enhanced grade, etc. It's all beneficial. It's also all beneficial to also for the profile within the industry, but to the government, etc. Because if the policy doesn't change in the fall, or basically if the government doesn't get voted out, then the question is, how's the policy going to change? We still think the policy is going to change, sort of inevitably. But part of what government's like is a big project that pays lots of taxes, employs lots of people, and so the more you have that, and it's obvious that the pressures build up from that standpoint too. And this project is the most closest point of any kind of town or whatever is Mount Isa, and Mount Isa is on a long-term decline where I believe Glencore is going to close, or said they're going to close the smelter down. Mm-hmm. So they have to be the government of that state has to be concerned about that town in the long run.
Mm-hmm, mm-hmm. And Marc, what about Murphy Uranium project? So what's the status over there?
Yeah, Murphy's early stage. It's really basically the extension of what we think is all the interesting exploration and other potential within reason around Westmoreland. I mean, you got a land package there now that's 80 kilometers from one end to the other. Lots of targets. Some of these targets we drilled this summer, we drilled satellite targets that were 10 miles in one case away from the main action and 5 miles in another case in another direction. So you can see from the scale of it all that it's pretty interesting. Though we've got targets on the territory actually, and targets that we'll be able to drill this year, I believe, for uranium specifically. Again, if you find a satellite there, it's interesting. But there's other potential for other commodities there. It's an interesting, obviously a pretty interesting piece of real estate. And if you can, big chunky pieces of ground in Australia are highly prized, really. And we've done a pretty good job, we think, over the years maintaining our land position without really having to shrink it much. We've applied for what's called the mineral development license, which allows us to kind of get more security of tenure without spending a lot of money. Mm-hmm. We actually recently stake new claims around the existing stuff because we actually, in light of where the uranium price is, we really don't want interlopers, right around our boundaries and stuff like that making noise. So, we basically think we have the whole district. That was kind of the goal. And then the goal through the bear market was, first of all, hold on to the ore bodies, but if you can keep the whole district, so much the better,
Yeah. Do you have any approximate plan of how many meters will you drill on Murphy this year?
We don't have the specific details yet, but we will be absolutely putting out much more specifics much closer to the startup date. That's a seasonality situation there with a specific wet season, dry season. We're in the wet season now. Typically, we're able to get on ground. Good year, we're able to get on ground late April. I mean, by our outside date would kind of be mid to late May, but we hope to be sooner than that. And some amount of time in front of that, we'll come out with a lot of specifics around how big is the program, what are the targets, et cetera. Okay. Yeah, so I think that's something that shareholders can look forward to.
Sure. You mentioned enCore Energy project a few moments ago. I know it's a hypothetical thing, but I got a few questions about the potential of marriage between your company and enCore Energy. My question is there synergies here, and could we maybe see that someday in the future as option for you and your company?
Oh, I mean, I think I sort of answer this question the same way virtually every time, which is, the M&A potential such that it exists, I think, in our space is probably these horizontal mergers. i.e. 1+1 is more than 2 because you're getting bigger. Ideally, there's some kind of synergy, although in a lot of cases, there's not a lot of synergy between an ISR in one state and an ISR in another state. That those are kind of natural fits a little bit because there is some benefit to scale, I guess. We've sort of always taken the position too, when we were fortunate enough to get Westmoreland, I mean, we have a big asset that can produce a lot of pounds. The goal is kind of try and create a company that can, produce 8-10 million pounds a year. And you would clearly be the second option down from Cameco because Kazatomprom for the longest time was private. Then it trades a little bit. It's a public company, but I noticed the ETFs don't give it the weighting that it would deserve from its production profile for whatever reason. And so in terms of Western capital markets, you really have Cameco as a big production company, and they've now not diluted, but I mean they've made a business decision to really beef up their investment in other parts of the fuel cycle, which is probably smart, to be honest. They're going to make a lot of money. They dominate and they touch every part of the fuel cycle, but they're leveraged to their uranium trade that most of the investors, probably your viewers, are trading on. A lot of that is the uranium prices, the growth of the projects. It doesn't have the same torque as it used to. So again, I think the benefit of creating that next bigger thing to Cameco as the production leader or next in line, so that's a valuable goal. And could we be part of that? Absolutely.
Yeah, definitely. And my next question is in regards to that. Are people not more knocking on your doors now than like 2 years ago? I mean, are companies, people approaching you, asking around about your projects, about the company, etc.? Do you see that activity more than like 2 years ago?
Yeah, but if you'd asked me that 2 years ago, and you said uranium's going to 100, I would have said, yeah, we're gonna be on speed dial at that point. So I don't think it's unexpected. I would guess everybody's talking to everybody at this point a little bit. I mean, we've had a lot of big runs into companies, and obviously companies tend to want to do things when their valuations are high. But you've also got companies. I mean, we sort of bifurcated the market into the developer group that was there that will be the projects to meet all the supply issue, and they're the ones really. I mean, you're not going to find something tomorrow. It won't be ready to go for 10 or 15 years. So the things you have now are the things that should meet the shortfall. And I would include things that, some of these major zone things people forget about. Cameco's got 2 things in WA that could produce 7-8 million pounds a year when that issue goes away. So in terms of the market going crazy and going to 200, I mean, that's the kind of thing that buffers it from really running away probably. So, we've had a lot of performance. And so you'd expect to see more dialogue and that sort of thing at the moment now.
Okay. Marc, you have completed 12 million, I believe, raise in November. How is the current situation with cash? Are you covered for 2024, or you will have to go on the financial markets at one point in this year?
Well, we're well cashed up now if we wanted to make it through the year, really, for the most part. I mean, we're certainly in an opportunistic market where there's capital available to everybody. So I would say that at some point we're going to probably do something that will inject more equity or something into the company. But you're also at a nice inflection point now with, I think the utilities got a real wake up call. And I think that WNA meeting for the first time where they were told by their own organization that, you better get on this because you might not all get your supply that you're thinking you're going to get. And so I think there's a little more creative thinking, maybe potentially to go on there. And you could see some interesting things develop that wouldn't be like the traditional things that you would think about, because everything's just a straight equity thing. And we really haven't had any of the finance because you really don't need it. Obviously, at $100 a pound, you really don't need to do a stream or sell a royalty or any of those kind of things. But the utilities could do some clever things to help the supply side of the market get supply to production quicker. I mean, in fact, that was really what the industry association was trying to do when they started with 232, is get the government to kind of bootstrap things to get some stuff rolling, because at at a place where everyone was losing money, including Cameco, clearly you were never going to get any more supply. So it's that 8 or 10 years where nothing happened that we're really dealing with now. So we're going to obviously have some good years come on the back of that. And so I think we're really in an interesting dynamic. The other thing I was going to mention earlier is, with that developer group that started, you had a few of those companies that, because they had, or there were projects that were effectively in care and maintenance, you've had the first bunch of companies that said, I'm going to go quickly, get in production. We're going to get paid for being in production. And they really have. Like, the valuations really tear down from there's companies that have forged ahead, the companies that are kind of next, and then the ones a little bit further out. But 24 is a huge year for all that, because the early starters all have to kind of deliver, I would say, by the back half of this year. And then you've got another suite of stuff coming in 25 that's still in the execution risk stage. And then you've got these bigger things, some things like us or a next gen, say, that everyone, yes, it's going to produce, and it's big numbers and all this, but they're further out. So that's also your dilemma when you're trying to, if we put these companies together, what does it all make sense? I think there's still a fair bit of it. $100 solves a lot of your execution risk. You're probably going to get in production. You're going to produce something. You'll make some amount of money, but is that what the expectations were when you started? Because we've only been in this little happy place really since the summer. I mean, I recall, I can't remember when we talked, but that run up from like 50 to 100 happened really quickly. At $50, a lot of the projects were like, well, the execution part of it better go well, because at $60 you make money, but it's not a party. At $100 it's a party.
Definitely. No, okay, we have a component, we have uranium price where we want to be. But Marc, what event for your company do you see as a big re-rate event where the valuation could be significantly higher than today's? Like, you have 200 million market cap, I believe now. What is that, a production start or something else? What is the event that will re-rate your company?
Oh, I think the biggest catalyst by far would obviously be change of government in Queensland. I mean, I don't know what we're getting on a PNAV basis for that project there, as far as a super high quality project that has, clearly great numbers. I mean, the projects from 10 years ago that were all around, like, they're in the same place they always were relative to each other on the quality scale and where they are in a cost curve. Really, that doesn't change. Yeah. And so what we need is a catalyst that says, hey, you can go ahead and do it. And if that happens in the way that it's a binary moment, and that's what happened the last time we had this change happen in 2012, the uranium price was $25 and the government didn't stay in power long enough for us to get permitted. We started down the road, didn't stay in power long enough. And so that would be, I think, be the single biggest change. I mean, you could see a project like that would instantly go to being at the top of people's lists about what's the biggest, best thing near term that can happen. And I don't think we'll trade at 200 million at that point.
Yeah. Good answer, and I agree on that. Marc, final question. What can investors, new ones and the old ones, expect in the terms of possible news flow from the company in the next 6-8 months?
Well, we still got results coming from last year, and then obviously we'll be telegraphing and detailing what is going to take place on the ground in Australia this year. We'll be talking about our permitting progress as we go along. Mm-hmm. We're going to be certainly exploring. I think now we haven't been very aggressive is the wrong word, but it wasn't the right time for us to really go out and make a splash with the utilities, or really sort of try and engage with the utilities. I think now that ChurchRock's kind of been surfaced in the way that it has, with numbers around it and everything else, it's not only the analysts that can wrap their heads around it, it's the utilities as well. So I think it's time for us to get out and get a dialogue going with utilities. And so I think that's going to be a big focus now going forward. And we'll see maybe there's something interesting and creative that can come out of some of that. Obviously the uranium price, we're responsive, as are the others. Yeah, I mean, there's a bunch of catalysts there.
Definitely. Marc, thank you very much for coming to my show. I wish you luck with all the projects, and let's catch up sometime soon again.
Yeah, fantastic, Lucian. Thanks. Appreciate it.